What's up, guys? What's up, Auk? How are you doing, my man? Reporting for duty, always present. Man, I'm just checking the resolution, and it seems to be fine. Yeah, looks good. All right, good. Because I'm once again at a different computer. I've been traveling a lot, so I'm switching screens all the time, and sometimes I forget to change the resolution. But it seems that this time, luck would have it that the resolution is okay. All right, so let's dive into it. Uh, I think today is going to be more a day where I am going to be telling you what not to do because not much is happening in the chart, right? It's the same as what I posted this morning. It's the same as this whole week. Like I think at the start of the week, I posted at this point, we're at, yes, I did post it at the start of the week. I posted that price was at the high time frame point of control for Bitcoin, and usually price takes a while, or it's a very normal place for price to start hovering around that point and control bit. So what I said was that I would wait for price to make a decision. What I also said is that I thought it could be time for price to either start ranging or retracing a bit to put in a higher low. And specifically, I mentioned within the Discord this low right here. And right now we have almost made it there, but we have not yet quite touched it. But I'd be surprised to not see it taken at some point. This doesn't look like it's gonna be left intact, but then again, who knows? It is Bitcoin. I'm not too concerned with these lower time frames. Like I said, for me, it's just being patient, and that's what I hinted at the start. That also an important part of training is knowing what not to do. And for me, in this case, this week has been about waiting, and I think it's especially difficult because in the last couple of weeks, I think we got so many setups because there was quite some volatility that I think the difficult thing to do is to come in this week and then try to force setups on well, there's some setups on statistics, but so much less than the weeks before. And then I think the temptation is to just start like forcing the trade, so to say. Whereas maybe sometimes the best thing to do is just wait. And today I want to go over a couple of setups that I already discussed in the chat, so maybe you've read it, but we'll go over that. I'll probably also give some high time frame overview since not much is happening anyway of what I believe is going to happen. Spoiler alert, I still think this is safe and these highs are next, but I want to talk about it a little bit more. But before we do that, let's dive into some assets that we've been talking about. What's up, Lars? What's up, Rafael? Yeah, Lars has an exciting announcement to make today. Actually, really cool what he's going to do. I don't know if I'm allowed to talk about it already, but he's going to, well, I guess it is because he already announced it. Today, he's starting a data-driven trading group where he's going to show show a thing or two of his tricks. So that's going to be really cool. I'm definitely going to be supporting him in that endeavor. Exciting day for you, Lars, I imagine. Or I think he's going to announce it today, but I'll leave the official announcement up to him of exactly what he's going to do. So stay tuned for that. But going here, so if I see this already, for me, this is all I need to know to realize that there's not much going on. Personally, I mean, this is something everyone must decide for themselves. But personally, if I see only bear signals, I am not too interested in it. I do have it very conservative right now, though. So if I would put this to 65%, oh no, wait, sorry, I'm doing that wrong. If I would put this to 65%, because these are some, if you get a strong bull signal on these ones, then they are really good. Then ENS is really the only one with a strong bear signal, and well, also Maker and Rune. Maker I already looked at. I will take a look at Rune and ENS. So this is obviously just for the general overview, but what I would like to do next is go through the whole shebang that I went through this morning and I posted in the Discord. So if we go to the daily high probability summary page, which is basically just high probability assets filtered, we can see that all of them are bearish. And it's good to start with compound, and it already got removed. So I'm gonna because this is proving my point very well, actually. Like, put things pretty clear. You can decide to always just follow the statistics and ignore the rest. So, for example, this morning we had that compound set up, and I actually have a chart right there. So we have this compound set up, and because the statistics were saying here, there's a 17.6% chance of only 17.6% of the P1s would be taken out. Now, there's something I want to say about this. First of all, you can choose to only listen to these statistics and just ignore PA, and probably on the long run, that would be profitable, right? Because this might be one of those 17.6% of the days, and that's okay. You can choose to just say, you know what, I'll take that, and it's fine. And there's really nothing wrong with that. But what I personally like to do, and you got to be careful not to drag this too far because you cannot be perfect, right? But I call this anticipating improbable events. I need to write a tutorial on this. I want to write a tutorial on this because obviously after now, well, nearing up to a year of, well, over a year personally of using it, you do learn a thing or two. And I found when do improbable events happen, there's just a certain environment in which they happen more often. And then, in my opinion, I would like to discard them. So I already wrote about this with comp, so this is what it was this morning. I assume that right now P1 got taken out, but let me just check that. Yeah, there you go. Got taken out. So this is actually a very, very nice example of what I was discussing earlier this morning. So let me just write that. All right. So this was comp. Man, I honestly don't know why I keep having that. The image pasted is way too large. It's really not that large. Let me try again. So what I wrote this morning is this. When I see comp USDT, I would personally immediately discard it for the following reasons. So again, we had the setup where P1 was the high. P1 was here, right? P1. Let me actually let me guess, too large. Yep. Again, we're going, because anticipating improbable events will simply increase your win rate, right? So what I mean with anticipating improbable events is, okay, so this is a low probability pivot, P2 at hour 4, P1 at hour 4. Right? It doesn't happen a lot. We saw that from the statistics here, comp hour 4 is 7.1% against 0.7 for either P1 or P2. So very low probability. What I mean with anticipating improbable events is simply the following. Asking yourself, okay, when do low probability pivots tend to occur more, right? If you know this, then you can prevent yourself from taking trades when that low probability environment presents itself, and as a result, you will probably increase your win rate. Now, let's read through this. Let me quickly dive in the chat before I do, because I see Tower. What's up, man? How are you doing? I'm not home today. ETH P2 does not happen on hour 5 for 1,135 days. Wow, I'm going to look at that. Kind of interesting. Today is the day it happens. I'm going to take a look at that, man. Thanks for sharing. That's massive. Holy shit. Over 3 years. Anyway, up to comp. So what I said is when I see comp uses DT, I would personally immediately discard it for the following reason. So the setup was more downside, and I said I would discard this. Simply looking at PA, you can see that price is stuck in a very tight range and volatility is severely lacking, right? So you can just see visually this is a very tight range and not much is happening, right? And we've been in that range since Tuesday almost, since Tuesday evening. This low was not put in by very strong PA, but rather a wick coming out of this very tight range. And when I say strong PA, what I mean is that I want to see, something really putting in some structure and just some candles, right? And this was not a good structure at all. It was simply a wick coming out of that range, which is what I meant with that. This is not what I personally want to see. As a rule of thumb, lower probability pivots like the current P2 at hour 4 you'd see happen more often in tight ranges. I've seen this happen time and time again. So for me, this is a no-go, and I would personally discard this setup as a continuation play, right? And look at what happened. We took out the high. Therein lies the key. With this dashboard, you're mostly looking for continuation plays, or at least it's the main way the summary page is being used currently. And if you have a super tight ranging example like this, then it's not a good environment for it. So I hope this makes sense on why I discard this. And since we have obviously taken out that high, let me just get the Minoma analytics indicator on there. So now we have P1 actually at that hour 4 and P2 at hour 11. I actually also wouldn't be surprised to go back into this range again today, because this is just what happened. If you have a tight consolidated range like this, what is most likely to happen is liquidity grab on both sides, which is exactly what happened here. And now we took the liquidity on the upside. But the key also lies in that, you know, if you're using it the way we're mostly using it, and I actually want to build features that help with range plays as well. You can actually use it with range plays, but I want to build a feature for that. But for now, the way we use it, especially the summary page and those statistics, the main way of using it until someone finds another use case is a continuation plays. So when I say here, with the dashboard, you're mostly looking for continuation plays, or at least the main way the summary page is being used currently. And if you have a super tight range example like this, then that's not a good environment for it, right? So very shortly put, small range, don't look for continuation plays, right? Because I mean, you just have to eye that. You just have to eye that. But if you take like a volume profile like this, then this is pretty evident. So it's good to remember that these kind of pivots, so the low probability pivots, they have a higher tendency of happening in ranges like this. They have a higher tendency of happening. So if you just not act on them in environments like this, your win rate should already increase. So again, it's a design choice, because you could always also just say, well, you know, this happens 17% of the time like this, and it's fine with me. I'll just choose to be okay with taking that loss. That's completely fine. It's completely valid probabilistic thinking. But personally, I do think you can just apply this rule and increase your win rate by a bit. So that was that example. Next, we were going to look at Maker. Let me check the chat if there's any question on that. No, there's not. Again, since it's not happening, I'm just going to go over the tips and tricks of things, what not to do, what to look out for, best practices. So next up was Maker. So let's check Maker, what happened. As I wrote, I have no clue. I didn't check again since the morning. All right. So I also have a couple of tips and tricks for Maker. And again, I know I already wrote this, so sorry if you've already read it and you think, man, I don't care. I've already heard this, but I do think it is good to review it and just make it clear. So this is the same P1 and P2 as we had this morning. And I'm just trying to get the screenshot on there, but complaining again that the screenshots are too large. There we go. All right. So what I said here was also not my favorite setup for a different reason. Hour 0 is not an actual pivot in terms of PA, but the current P2 is. And the current P2 also took liquidity. Pivots that took liquidity in some way or form are generally speaking the stronger pivot. And preferably you'd want to see liquidity taken. It doesn't have to be much, but some liquidity would be good. With that said, I do like the way this looks better than compound and could be more inclined to try my luck here. Reason being is that this chart is clearly more volatile than previously discussed comp and is not stuck in a tight range. So let's zoom out so that becomes more clear. What I mean with that is that you can clearly see there is some volatility in prices moving to different points, right? Whereas compound was stuck in that very small range, compound is clearly, or Maker is clearly moving. So it's a completely different environment. If we would have been here, it would have been different, right? Because here you can see we are ranging. But ever since then, we have been, except for maybe this part, we have been moving around. So this is something you would want to see in order to take continuation plays, in my opinion. And it doesn't mean that you cannot ever take a setup within a range, but the range just has to be big enough for there to be room to move intraday. That is the key. But so, I do like this setup better for that reason, because you do see there is more of a trending market, so to say, more displacements. So it does make for a better setup. There's just two remarks that I had that I do not like. First of all, hour zero is not a real pivot. What I prefer to see is hour zero, a pivot, doesn't matter which one, but usually it's hour zero when this happens. So right now, this is the pivot, right? The pivot is here, whereas it would have been better if this is the pivot. And that's what I mean, right? So it is P1, but it's not an actual pivot in terms of PA. Whereas P2 right now is that pivot, right? Because we have that bottom as such. Not only that, P2 also is taking liquidity, because you have this liquidity here. And at the end, especially reversals, they often happen, or they pretty much always happen when enough liquidity has been taken. So in this case, here obviously we took liquidity. So this pivot would have been, for example, a lot better, but also actually a low probability time here. But just for the sake of argument, this would have been a better pivot as a P1. And let me check. I mean, even this would have been better. I have to say, though, I would have to gather data to be really conclusive about this, but I'm definitely sure about the liquidity grabs. So those two things are things I do not like. I prefer not to see it. If I would really tell myself, okay, I'm only going to take certain setups, really the high probability ones, or the ones I know, or from what I've seen, because for these kind of things, I actually do not have data. I will have at some point plenty of ideas, but then this is not something I would want to see. However, with that said, so that's what I finished with. With that said, I do like the way this looks better than compound, and could be more inclined to try my luck here, right? Because you do have that more how do you call it, more trending environment, and maker actually has the best probabilities for today, and this would be a 14.4% occurrence, and actually is happening even less than normal. So I also would not be surprised to actually take this out. Maybe if you would put this take this low again on a afternoon, then maybe that would be a good opportunity to look for longs, right? Whereas you can say, well, this doesn't seem like the time yet to revert. Maybe something like this could happen, or just go on. So if I would have to make like the previous one, compound, I was pretty sure that was really not a good setup. This one, yeah, I could be inclined to take, because I do think there is still a possibility that you're going to take low, even though this took liquidity and this is not the best P1. But it doesn't mean that this P1 never holds, right? That's not what I'm saying. I've seen it hold. And one could also wonder, well, if the P1, the pivot is just before that, maybe then it gets negated. But so right here, right? An hour before we had this pivot. So maybe that's get negated. I would have to have data on that. Maybe you can say this is close enough. I don't know. Usually I do not like the pivot when there's a couple of candles, when it's like here. But maybe this is close enough. Who knows? Either way, this one is a bit better. So more downside, I could definitely see that happening on this one. And let's see. Bitcoin took the highs. Would be nice to take equal lows. And I was just looking in the chat. That's also Sergio. Thanks. You're welcome, my friend. De nada. All right, I'll check Bitcoin in a bit. I first want to finish off with the last one, because it's an interesting nuance, which is LDO. LDO. There we go. LDO USDT. Perpetual. Yeah, I haven't reviewed all of this since I wrote it this morning because I've been busy. So this is me putting myself in the crosshairs as we should. All right. So LDO, what did I say about LDO? We can see a similar thing as with comp. Now at the bottom of a clear range, right? So again, you just pull the value area. You can see there's a clear range, right? The price is clearly ranging within this here. And one of the ways I always spot that is simply because of the volume profile. If this is the volume profile, I've mentioned this often. So you have that normal distribution, kind of looks the same as the P1 distribution of the data. And there's a reason for that. The normal distribution in financial analytics is holy. But if you see that, it's a perfect combination, indication that indeed you're in a range. Let me put that back on. So what I said, we've seen a similar thing, now the bottom of a clear range. However, the situation is slightly different. The range is not as compressed as the one with comp. It has enough room for intraday move due to its size. Preferably, I would have seen it a little bit bigger, to be honest. But what I mean to say with this, the comp one was really, really, really tight, like really tight, because you could see price was just here with comp and then poop wick, poop wick. And you can see this one has a little bit more room for intraday moves. And this is what I meant when I earlier said, hey, you can only, it's not that you cannot take continuation plays within ranges, but you want to see some more distance in the range so that there's actually some time to move. For example, this is an extreme example, obviously, but just to give you the idea, because extreme examples usually get the point across. I mean, that's sure what they seem to think in politics these days, and it's true. Well, that's a pity. Man, why is this thing becoming so slow? Let me just get another chart. All right, so the extreme example I wanted to make is Bitcoin. When I say the range needs to be big enough, and I say extreme example because I realize this is a really big range, right? But so what I mean to say is like here we have this really big range where we have been in for months, and we have taken plenty of good continuation trades in this range. Especially, I remember this part right here was awesome. We had really good trades here. And you can see also that because there was volatility, right? But the main point I'm trying to make, this range is big enough for there to be plenty of room to go from one side to the other side and have intraday signals to play out. Whereas the comp one clearly did not. The comp one probably has 1 hour signals to play out. So if you're scalping, you could do it like on the 1 hour, obviously. But it doesn't have enough for intraday signals to play out, whereas this one does. So this is what I'm trying to hint at. And by the way, since we had so many good signals here, imagine when the fucking bull run starts again and alt season starts. I think that's going to be absolutely epic for the dashboard. And I do think it's coming. Well, alt run, I'm not sure about, but the bull run should at some point start again. I do believe it's getting closer. As you know, I do believe this is the low. But let's see. But I mean, then you're just gonna have this all the time. So that's we will be behind our computers a lot in that period. So definitely stay tuned for that. Anyway, that's the main point I want to make about that range, right? It has to be big enough for the intraday moves to play out. And in this case, that's simply not the case for comp. But for LDO, you can make the case that that is the case, right? Because you have this range and you can see there's kind of these intraday moves right there. I mean, you could even do this and see, well, is there room? I'm just gonna cut off these markers. And you can kind of see, you see, even if you put it like this, you can see, indeed, there is room to go from 1 day to from the start of the day to the end of the day to the other side of the range, right? You can see it clearly on every day. We take this as first one. We start here, we go all the way there, then here, and we go here. And then here we start here and we go here. Here we start here, we go here. Here we start here, we go here. Here we start here, we go here, question mark. Right, but anyway, I think the point is clear that you do have enough room in this range to kind of take some setups. For example, here was a setup in the middle of the day. This was not a setup. It was already done by the end of the day. This was a flip, so I'm not gonna say that's a setup. This was a setup, and now, possibly maybe this is a setup, and that's where I want to say the rest is the range is not as compressed as one on comp. It has enough room for intraday moves due to its size, and then it said some good PA leading into the low, proper candles instead of that one wick. So what I mean with that is what I said earlier is that now you see you have this just some proper candle closes, whereas compound was really just like right that wick. So this is more solid PA in my opinion. We have flipped here, the point of control to resistance. So right now we are testing that again. So let me actually, equal lows have barely been taken. Usually these require more distance for a proper liquidity grab. So with that, and let me just set this one back to 0. Is that these were equal lows, and now you saw this SFP. And you also have these lows and these lows. These lows have barely been taken. Like these lows have barely been taken. I wouldn't consider this a good take of those lows. I mean, also look at the volume here, right? This is the volume on that wick. That's no volume for equal lows. What you usually want to see with these equal lows is that you want to take them like this, and then after that reclaim. So because there's a lot of liquidity here, you have to understand a lot of people are longing this. And that means a lot of stop losses here, probably a lot of breakdown traders. So there's plenty of liquidity to be taken. And usually a low volume wick like this doesn't do the job. What you usually see to take these kind of points is that price needs to move down below that level with some distance and some time, right? Both of these. So not just a wick on high volume. I mean, that would already be better than what we've seen now, but something like this where you spend a little bit of time and then go this, because then a lot of people will be capitulating here, and market makers will not only have the place and liquidity, but also time to fill their orders, right? Market makers for big orders also need time, not just liquidity. So that's what I mean with equal lows have barely been taken. So this one is actually where I could see price go a bit lower before reversing, and thus this might be an asset I want to look for a continuing downside for that liquidity grab before price can reverse back into the range. But the truth remains, also this is not your ideal setup since it is in a range, right? So, I mean, I've discussed this now but at length. What we could also do for LDO is look for a range trade using the data. We know we have resting liquidity to the downside, talked about that, and the current low doesn't look too great. Low probability plus resting liquidity at low. So it's a possibility to put in P2 during the afternoon hours, so high probability hours, and revert back up. So two things I mentioned here is that, well, I do think this one looks better than compound, this trade, for continued downside. I also think this is acting as a magnet. Doesn't mean we have to do it now, right? We could, you have to be aware that this could happen too. But in generally speaking, also because this here is the value area high, you can also see that if you go back in this range, and I've seen this before, that price oftentimes starts at one side of the range and ends at the other side of the range, right? So it starts at the low, ends at the high. Starts at the high, ends at the low. Starts at the low, ends at more or less the high, right? We have this final in the middle, but more towards high. Starts at the high, ends at the low. Starts at the low, ends at the high. Starts at the high, ends at the low. So, I do like this one better than compound because of all the things I mentioned here. So this is also one where I would be more inclined to take one to the downside. However, it's also not the ideal setup for continuation plays because you are simply within that range. So too long didn't read, still not the best looking setups in my opinion, waiting, ... Because again, also a big part of it is realizing, at least if you're taking these kind of trades, like if you start taking these kind of trades, you want to change your system a little bit at least, right? You don't want to. You have to be aware that you're not in a fully trending environment, but you're in a ranging environment, and almost every asset's in a ranging environment right now. So you have to be more aggressive with your take profits. And you have to realize that lower probability pivots are more likely to happen during this time. So it's still possible to use the data, but you want to be more conservative and take profits and realize, there is a more likelihood for fuckery. So you can choose to still trade this, and there's perfectly fine systems to do that. And one of the ways I just said, well, wait for the afternoon hours for this to be taken, and then see for a high probability pivot at the lows being put in, and then trade it up. Although at these ranges, you just often see them at weirder times. But we can actually look into that. But you have to just be aware of that difference in context, right? And one of the things you could choose to do is just not trade and say, well, I'll wait for volatility to show back up again. And if you just want to take continuation trades, that's what I would recommend doing. But each their system, and you don't definitely like range trades, you can definitely also take. But you have to be aware that the environment is different, and you need to handle it differently, right? It's different. It's a different trading strategy. So here we have P1 hour 1, P2 hour 21, P1 hour 0, P2 hour 22, P1 hour 0, P2 hour 8, P1 hour 7, P2 hour 20, P1 hour 0, P2 hour 17, P1 hour 0, 2 hour 5. It's actually not, the P1s seem pretty reliable actually. So yeah, a little short, honestly, would not be weird. And that's actually one of the things I like in a range like this. For example, you could, oftentimes I would have probably, it's hypothetical, but I would have probably longed this. But now I could say, well, statistics are indicating that it's not the best of lows. And if you look at this, it's also not looking like too weird of a thing that we would go lower. So then you could wait with longing until this happens, or even short into the range low, right? Which is normally not advised, but if you have the data to back it up. So conclusion, LDO, possible short to the lows, but be aware that you're ranging and don't take it too far. Possibly you could choose to wait until the lows are taken and long that. That would be another approach. Compound, already said, don't take it, discard it. And we have since seen that pump. And maker, I've also said, well, there is definitely a possibility we are going for those lows because, well, of all the reasons I've said, and it does look more impulsive. So I just wanted to go over those because I do think there's a couple of good practical tips there on what to not to look for and what to look for to increase your win rate and just not get caught up. And you can see, so basically the conclusion was that compound I wouldn't take, LDO and maker I would consider, but not the ideal setup still. But they do look more probable to be taken out. And that's actually already enough, right? If compound was just a no-go because of what I said, and then you can say, well, okay, that's a no-go, and then I will take LDO and maker. And I realized that sometimes I'm going to be wrong, and that's fine. But it is not an environment that you have like enormous red flags. And I do think you have to wonder for yourself, okay, what are your red flags? Like what do you really not want to see in a setup? And that's important to have clear for you and certain rules. And for me, one of the rules is, that tight range that you saw. I don't want to see that. I just don't want to see that. And another rule I have, I've said this before, is MPOCs. So I have this indicator often on when I'm checking the charts. And if I see, for example, that we don't have it now because we took it, but if we would have had an NPOC here and we would have bounced off from that, hypothetically speaking, that's a no-go for me. That's unless statistics are really convincing and the trend's really strong, then I will not care. But if I see this in another environment, then I will not trade into that naked point of control because I've just seen that they are very strong. But again, it's a rule you must make for yourself, right? It's a rule that you can come up with. There are certain rules you will find also, just be observant of when things play out and when things do not play out according to the statistics or the more favorable sides. And at some point you will see there are certain situations where the unfavorable possibility will play out more often, and then you can just tell yourself, okay, I'm going to have a hard rule not to do that. Let me quickly dive into the chat. Franzo, what's up, my man? How you doing? America does look pretty strong on the weekly statistics. Let me check that out. Let me check that out. I didn't even check. That's a good one as well. One of my other rules is that for example, if I want to take a short on the daily, I do not want to see a strong weekly bullish signal. I'd rather not have it. I don't see maker here at the top. Maker here doesn't look too strong to me. 39.4, 39.3, 84.6. I mean, yes, it's bullish, but doesn't seem incomprehensible at all that we would flip it. But maybe we're looking at other data. Pretty strong on the weekly. It is. It is. Did you watch that? I know. No, wait. No, it's not. Never mind. Man, I need to buy a new MacBook. It cannot handle the streaming anymore. Yeah, it doesn't look too convincing to me, to be honest. I don't see any indication that this could not flip. Otherwise, the weekly low. So it would not be a very low probability event to take the low from here. Lugalium. Last time MRK, okay, maker, I guess, at a P2 on Wednesday was 13 weeks ago, 1st of January. Oh, that's actually an interesting one. P2 on Wednesday, which is the current P2. But last week it had P1. Well, wait, that's not last week because I have filter mode enabled. If you have filter mode enabled, then this table will be filtered as well based on the cluster you have selected. But I didn't mention, I'm probably going to change that. Monday, Wednesday, Monday, 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 Tuesday, Monday, Thursday, Monday, Tuesday, Monday, Monday, Monday. So yeah, the conclusion would be that either this will be the weekly P1 or we're going to have some reversal. But I wouldn't, the reversal is definitely not safe yet. So I definitely, so right now, you know, my bias remains to the downside for the day because of this this range right there to take out the lows. And then you can just check after tomorrow what happened, right? What could happen, for example, is that, well, you know, we have downside for today. What could happen is that this happens today, and then, well, you already, the market gave you the answer. The market gave you the answer because, you know, well, downside for the day is more likely, a bit more likely. Well, much more likely, actually. Good morning, Elena. Welcome. See, I'm doing the streams 1 hour later now, and Yelena is present with us. It's good to see. And indeed, 13 weeks since the last P2 on Wednesday. So it seems unlikely that this Wednesday is going to print that P2. Yeah, I've pretty exciting news for you guys, for your meme coin traders out there to mention. I figured out a way how I'm gonna, because the reason I don't have a lot of meme coins and other assets, because a lot of assets don't have the minimum 2 years of data that I would like to see. But I came up with an idea that what I'm gonna do is that I'm simply going to filter out the weeks that because the problem mostly lies with the weeks, right? If you don't have 2 years of data, then you don't have 100 weeks to work with, which is just like as a minimum, you want to have 100, and then you're already cutting it low, right? It's not 100 data points, really not a lot to make very significant conclusions. But since you're working with weekly time frame, I mean, it is what it is. But I figured, well, even if there's not 2 years of data, with 1 year of data, you're already 350 days or 365 days, obviously. With 365 days, which should be enough for the day, still not, as much as you would want. So what I'm going to do is I'm just going to integrate it that the weeks, the assets that have less than 2 years of data will not have weekly statistics available for you. And I'm doing that to protect people because I know people will not realize and then just make conclusions on something that barely has any weeks in there, then price will still needs to gather more data. But it doesn't mean you cannot already look at the days. So I'm just going to filter out whatever asset doesn't have enough weeks in there. And then what I'm going to do is hand you the days. So that means we're going to have way more assets in the dashboard and also meme coins. So I'll be working on that. I thought it was a pretty good idea, if I may say so. Terror, I'm a bit behind on stream, but yeah, dashboard with a bull training environment will be wild. Yeah, it will be. It really will be. Lol, think I misread it. That happens. I do that all the time. All right. So, yeah, I noticed my stream is lagging a bit. Let me see if I have any programs on that I can close. Close Discord. Let me see. Let me see. Yeah, I'm just gonna buy a new MacBook. But all right, so Maker so far seems to be going for the low, and remember what I said. Well, you can actually just read that here. Let's see what LDO is doing. So we decided for both LDO and Maker, they could be going for the lows. Yeah, so for LDO, I said, POC flip to resistance. So far, we're still rejecting off it, which would also be interesting to see if that plays out. But so far things seem to be playing out as per the analysis. But in general, I do want to emphasize once again, low volatility. Sometimes it's just best to sit in your hands and wait and do nothing. That's my opinion. But each their own. Let's take a look at Bitcoin. All right. So, well, I mean, yeah, this is just purely from a PA perspective, but I'm not a big fan of these lows, right? If we're talking about liquidity, then there is definitely liquidity there, plenty of it. And there's something I want to say actually in terms of higher time frame. I think I've regarding statistics, I've said what I wanted to say. I don't think there's much more to talk about right now because there's simply not much happening. We can check one more time if that changed. If you have any questions, obviously about any statistics, please let me know. But I want to now dive into a little bit more the high time frame and the more qualitative aspect of things. Statistics being quantitative. If my MacBook wants to wants to respond, that is. Yeah, not any seeing some bullish momentum, but on the hour, but nothing too crazy. So let's dive into the qualitative stuff. Or maybe one more quantitative. We have the P1 on Monday and the P2 on Thursday. That's what we had last week here. Then we had the reversal. The question is, can we do that again? Yeah, I really wouldn't know. But seeing that happen twice in a row, that I imagine that never happened before. So considering it's a very low probability event, I would say at least not this week. Man, I'm just gonna buy the most upgraded M3 MacBook with everything on there. I saw they have one with 64 gigabytes of RAM or something, or no, 128. What was it? Something insane. But I want to see. Yeah, so last B2 on Thursday, 24 weeks ago. So let's say lower makes more sense because otherwise, we came from the value area high right there. So that's a significant point. We definitely took a lot of liquidity because we had those naked point of controls there. Oh shit, I have that on another chart. Let me just put it like this then. Naked point of control then. So this didn't happen for 24 weeks as P2. Then the other thing that could happen is this, but that already happened last week, and for that to happen again would be pretty wild. So I'm just going to assume that's not going to happen again. And then the logical conclusion is that we're going to need to go lower for the week. We've already seen that this is some very shitty lows. I would preferably like to see that taken out. And I've mentioned at the start of the week that the low I'm specifically interested in is this one right here, right there. I'll call that a 4-hour low. I mean, I know most people will not call that a 4-hour low, but YOLO. So I would argue that that lower makes more sense, and I do also have a reason for that. If you have been following my Twitter, and I'm actually gonna take that as an example. So far, LDO is going up. I wouldn't be surprised to see one more little drop of Rooney there, to be honest. And I'm gonna close my dashboard for a bit, see if that can speed things up. Don't worry, it's not that far down. Tweet I want to show. Man, my MacBook is slow. Jesus. All right, there it is. All right, so as you probably know, at the bottom I was very much bull posting to take out the highs. And one of the reasons was all this. I mean, there were many reasons, but one of the reasons is that, I said, let's not take all that liquidity up top. Words never spoken by market makers. And I drafted out all this liquidity, hint, hint, hint. Where do you think price is going to go? I talk often about liquidity. So in this case, I didn't see any reason not to go for that liquidity. And mind you, this was at the point where a lot of people were calling for 44K. And this is what I was saying. Okay, I think this is the final capitulation. I'm buying, and I did. But the point I try to make is that here you could see, I mean, there was some, first there was a naked point of control here as well, this bottom, but you could see that even if you would map out liquidity on the downside, there was only this order block right here. The rest of the liquidity all resided to the upside. It all resided to the upside, right? So there was a lot of liquidity there. And you can see that well, if we went to the post I made after that, where I said a lot of the liquidity to the upside I mentioned 3 weeks ago has now been taken, yet plenty still remains. This would not be a great place to either range for a while or retrace a bit further down to put in a higher low before taking liquidity that's left above the highs, high time frame. I remain bullish. So what I meant with that is that you can see this naked point control taken, this one taken, this one taken, right? So I said it will not be a great place to either range for a while or retrace a bit further down, which is what's happening now. And I want to explain why I said that, right? So I said that, I think, somewhere here, probably at these lows. And why that is probably best to go on this chart if it will allow me to load it. What's up, HFT? Good Gallium, HFT. You can hide, but you cannot run, my friend. The fly. Nice. So here we have all the MPUCs, liquidity. Right. So you saw what was the situation before. I'm just going to delete all the old NPUCs that we hit. And then what happened after that? And where did my NPUC go? There it is. I don't know what's going on with my trading view. I've had this before. It's like removing drawings and suddenly they pop up again. I'm just mapping out naked daily point of controls now. Now I'm going to turn off this indicator, turn off this one, and map out the liquidity right there. And update this. Ooh, this is actually interesting. Look at what I find. Oh, beautiful. This is what you want to see, guys. This is what you want to see. This is making me bullish. Screw the bears. Screw the bears, guys. You know I'm full on team bull. There we go. Beautiful. All right. So, but the point I want to make is that so at this point I post this will not be a great place to either range for a while or retrace a bit further down to put in a higher low before taking liquidity that's left above the highs. The reason I said this is because you went from a situation where you had all the liquidity resigning to the upside, right? You can see just, I mean, again, I didn't have the order block marked, but imagine one order block here. But other than that, all the liquidity is to the upside, including this here that I didn't even mark out. It's all to the upside. And then we came here where suddenly you had a lot more liquidity to the downside generated. See? Oh, and this is, by the way, the NPUC we bounced from on that macro low. I'm just keeping that on my chart because I think it's so beautiful. And why I reacted to this equal highs the ways I did, I will explain in a bit why I'm so excited about those equal highs. But now you can see that there was a lot more liquidity resting at the downside as well as the upside. So there is a more balance of liquidity, right? And you have to understand that liquidity is a magnet. So if liquidity is a magnet, then you can clearly see here that liquidity is, or the magnet is only working really one way, especially because the high time frame were in a range. There's all these other macro factors that I've talked about why I personally thought this low was not going to break down and we were going to go up. But you also have this, so I'm not saying that liquidity is the only thing, because obviously the lower you can map out a whole lot of liquidity lower on. But for me, this was the range. And then, if you're at that range and then you have all that liquidity just resting to the upside, then you have that magnet working with a pull up, right? There's nothing really pulling it down. Whereas now you have the opposite, or at least here, this was the case here, where you have, yes, you have the liquidity here and still plenty of it, right? Don't mistake just a couple of lines for a little liquidity. This is an enormous amount of liquidity. And then, but what happens is that you also now have like quite a bit of liquidity due to downside. So you have liquidity pulling both ways, right? You have that force being extracted both ways rather than just one way. And therefore, it makes sense to kind of, pull back a little and at least grab some of that liquidity. I'm not saying we have to grab all of it. I don't think we have to, but at least some of it before you continue higher. Because you also have to realize that not only do you have now that liquidity there, but you also are in in the middle, or you were at the higher ends of the range, right? So it's really not that weird. I had this guy on my Twitter who's really annoying. I've been saying, this low next will go for the highs, and for some reason every retrace he seems to find it necessary to comment and say, hey, but look, oh, you were wrong. We're not going for the highs. Like, bro, I never said this was going to happen, right? I never said this was going to happen. It's perfectly normal for this to happen, right? That's perfectly normal. All I'm saying is that I think this is the low, and I think we won't take it again, and I think we'll be going for the highs. But I'm sure you guys all understand that when I say it like that. But my main point I'm trying to make is that you can see that the balance on the liquidity on both sides was more balanced in this case. Plus, you also have to think, okay, what's everyone looking at? What's everyone looking at? And this is, and now we're really going into the qualitative area. This is absolutely not quantitative. So you can see that this stream is transitioning from quantitative statistics to qualitative sentiment subjects, because this is where we enter sentiment. It's one of my favorite subjects. Maybe at some point I will put it in the dashboard as well if I can find a way to do that. Although I think it's going to be difficult because it's also just experience and instinct and intuition. But if I know that there is still an enormous amount of bears out there, and especially what you have to understand, what happened here is that a lot of people got sidelined, right? People were capitulating here, which is why I said I think this is a final capitulation event. And then let me actually first remove all the liquidity so that things become a bit more clear. Let's think a little bit about what happens here, right? So we have the bears here in their short positions, which all in their short positions here, celebrating here, enjoying. Even the ones who want to take profits here decided to delay their take profits, decided to put it lower because clearly it was going to 40K, and everyone's celebrating. The bears are like, "Fuck you, bulls!" Everyone's laughing, everyone's having a good time. Who's not a bull? And then the bulls are freaking out over here, like, man, what's happening? I thought we were going to go to all-time highs. What the fuck? They're selling, they're capitulating, right? And so basically, you have like both bulls and bears are losers here. You have to understand that there's not many people, even the bears, who will take profits here, because everyone in there, and this is what I mean, everyone in their shorts here, and this is why I've posted that these shorts are not going to survive, and I'll come back to that. These shorts, I'm just positive. Let's say I'm 98% positive that they're not going to survive this range. Or let's say 95. You don't want to be too cocky. But what happens is, when they enter this short, they might say, okay, I'm gonna Well, there's a lot of people who say, okay, well, I'm super bearish. I'm gonna target here. There's probably some of those, but I think the most part, what people are saying is like, okay, I'm gonna take profits here. But then as price is approaching this, they lower their take profits, right? So they say, oh, well, you know what? It's actually looking very bearish. Like I'll put it lower. Then they put it here, and then price nukes down, and they're like, oh shit, let's remove my take profit. Yeah, no, now it's definitely going to 44K. Meanwhile, bulls are freaking out because bulls are like, holy shit, like what's happening? We're breaking down. They're like breakdown. You saw all these breakdown posts here of the range. Oh, the range broke down, blah blah blah. And people here were selling. The bulls were selling because they thought, oh man, like it's going to 44K. Well, that happens that we saw that quick recovery. So what happened? These people are now still in their shorts. I'm telling you, a lot of these people are still in their shorts because it's very hard to see it recover. And for people, then if you were inexperienced enough to lower your take profits after a move like that happened, then you're also going to be inexperienced enough to not be able to say, okay, well, I'm gonna take my there's a sign of strength. I'm gonna take my profits here because if you were up in profits this much, then it's very hard to say psychologically speaking, well, I'm just going to take this because it's, you had more and you lost that and you want what you had back. It's just basic psychology. So you have these people still in their shorts, and that's why there's so much liquidity up here because everyone has gotten such a nice opportunity to short here, and it's just been way too easy, which is why they're going to get taken out, or at least why I think they're going to get taken out. And then the bulls have capitulated here, and they didn't have a chance to go back in, right? So what happens then is that you have all these people that are sidelined, and these bears still in their positions, hoping the price will go back to the profits it once were, and then usually they're just not going to work. And I think that's also the reason why this guy got so pissed at me, because what probably happened, because he actually came in my messages here saying like, hey, or where was it again? I think it was right here. Uh, it was here. He was here saying, "Oh, Sergio, you were right. I sold. I thought the influencers got to me. I sold. What do I do now? Do I buy back in?" So I just told him. I said, "I don't know." I said that's up to you. Like I'm not gonna say that for you. And then at some point here, he said, and I'm not saying this just prove that I'm right. Not at all. I have a teaching out of this. And here he texted me and said, "Hey, you were wrong. You said we were going up, but the opposite has happened." So I told him, I said, what do you mean? We were still up 20% from the highs and we just had a 6.8% retrace, and I didn't say we're going up in one straight point. I said we can have lower time frame retraces. I just think this is next. And anyway, then what happens is that here we had another high and then went down. And then here he came again. He said, "Oh, you were wrong. We are going down and not up." So what I think happened is that he sold here, then he probably bought back in here, and then here he and then he bought back in here, sold here, bought back in here, sold here, and trying to blame me. But the main point, and a lot of people are doing this, so I'm telling you because it's important to understand how people operate in these things. And what now happens is that these kind of people who are now pissed because they're mad, right? This guy, for example, he got mad at me because it's easier to blame someone else than blame yourself. So what happens now is that these people are pissed and they're just saying, well, they're mad at the market, they're mad at everyone else, they're not mad at themselves who they should be mad at, but because he's the one who sold here. But what happens is now they want price to go down because they're emotionally invested in, right? They're like, well, I'm going to show you, like market's going to go down, I'm going to take these lows, and yeah, I'm going to go back to Sergio and post towards him and make fun of him that he was wrong. That's how I'm not saying everyone thinks I'm going to prove Sergio wrong, but a lot of people think like this, right? They get emotionally punished by the market and then they want it to go back down again. So also what a lot of bears, in addition to that, which actually the original point I wanted to make, are looking at is that they're looking at this as a series of lower highs, right? This one you can actually delete, it's not a lower high. But they're looking at this, so now what they're saying is, well, this is the next lower high, and price is going to go down again after that. I fully disagree with this. I fully disagree with this. that's I'm not saying that absolutely cannot happen, but I'm saying that I don't think that's a good way of looking at the structure like that in this case. But what I am saying is that that makes for a perfect trap. It makes for a perfect trap because that means that it's another condition why the shorts are going to stay in their shorts, and it's another condition why it made sense. Yeah, this is actually the whole. I just got sidetracked so much. I'm sorry, but this is the whole reason why I started this, and that's actually why it made sense also to retrace here. So not only did we have the liquidity at the bottom, you also have this perfect point to retrace because a lot of people will be banking on it. I mean, you have two options, or let's say, well, everyone, even there's two options. This is indeed a lower high, and you go down from here, which I think is improbable. Or you have just here a lower high for a bit and make people believe it's a lower high, because that's what a lot of bears will now be saying, right? It's like, oh, we have now put in a lower high, so therefore, we are going down, which gives plenty of opportunity to generate even more liquidity at the highs and come back for that later. And then the final thing I want to say about it is that now, therefore, we have these. Ooh, where did I leave the best one? Let me check. There they are. So if you remember what I said at the start of the stream about equal lows, about the liquidity needing to be taken, and also the equal highs, then you can see here the equal highs and here the equal highs. Right? Remember what I said? These points usually need to be taken with force, volume, distance, and some time. Right? So something like this. Now I see all this liquidity being built up. This just, for me, this screams that it needs to be taken, and not just taken. Once we get here, I wouldn't be surprised to see a cascade of liquidations and pushes up to higher prices, which is also the case I've made since April, where I said if we go for the lows first and then go for the highs, the amount of liquidity that's being generated and the time for capitulation has been sufficient, and probably this will have not act as that much resistance. I'm not saying that means we will go to 100K immediately. I don't think that should be the case per se, but I wouldn't be surprised that once we start going there, that something like this will happen, and then maybe, I don't know, some consolidation there. We'll have to see by the time it happens. But I'm not saying we go straight to 100K, but yeah, I would not be surprised to just once we start touching these areas of liquidity, because this is so much liquidity right now, that you will go higher. But in general, you can use the sentiment to realize that, well, people will probably consider this a lower high and aim for lower. We have all these bears in their positions, which are just the perfect target for liquidity. We have all these bulls that are sidelined, that are mad at the market, that want to prove whoever bought here wrong. So in my opinion, you still have a perfect storm for further upside. But that doesn't mean we cannot go lower in the short term, right? I mean, I think this liquidity looks right for the taking. We have already established with statistics that it seems likely we'll be taking that this week. And then I think it's going to be very interesting to see where we are at the start of next week. Let me just see one thing. Yeah, so below those lows, there's actually a fair value gap here. There's also one here. And then we can put our make dailies going on again. Yeah, I mean, for me, it's hard to say where exactly it would bounce, but I do believe that it would be a higher low. I'm not saying it's absolutely impossible. You cannot go for this low. I just personally think it's a lower probability, but if we take it, I'll be happy to admit I was wrong, but that's what I believe. And here, right now, we also have this 0.5 right there. So this area actually looks very nice, that 0.5, where you would take out this liquidity right here at the bottom, and then you can start making your way back up again at the very area low. There's quite some confluences there. And this probably at this point everyone will be saying, see, we're going to 44K as confluence. So that's the qualitative part of the stream. Keeping it on my chart because I think it's so beautiful. Solid reason is indeed, right? A lot of people think like that. It's true. Crypto Twitter is the best example. It really is, man. That's where I also get all my sentiment analysis from. I love crypto Twitter. I really do. All right, guys. But I think this is it. I've talked through the statistics. Let me quickly see if anything is happening on the coins we talked about. We already see. So LDO right now is still POC acting as resistance. Let's see if it can go for that low later on. Again, not the highest probability, but one I would be willing to take a bet on. Maker, still just kind of hovering around here. Also where we'd say, well, lowest targeted. Also not the best setup in terms of PA, but better than comp. So it really depends on your system and what you're willing to take and what not to take. But with all that said, guys, I want to thank you for tuning in. Thank you for engaging. I really appreciate it. It's always more fun with people engaging than really a 1.5 hour monologue with yourself. So thank you for that. And with all that said, I want to wish you the best of days. Have a good rest of the week. And I will catch you guys in the Discord. I'm going to be a little bit more active again with posting analysis. So I'll see you guys in there and catch you on the next stream next week. And I think Tim will also be having a stream next week again because he'll be back from his holiday. All right, guys, have a good one.